This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Christine Stewart, and if you missed yesterday's show, we'd like to welcome you to our new studio. We love all the new bells and whistles, but our goal still remains to bring you mortgage industry news you can't get anywhere else. But today, we start with the obvious. Volatility in mortgage rates will continue in the near term, making your job a little harder. Redfin reports that a house hunter looking for a $500,000 home saw their potential total mortgage payment fall by $64,000 from July to August, and then jump $118,000 from August to September. So here's the math. When we started looking in early July, they expected their monthly payment to be $3,051. When they found their dream home in early August, they expected their monthly payment to be $2,874. When they locked in the mortgage rate for their home in late September, their final monthly payment turned out to be $3,202. That means on a 30-year loan with 20% down with an interest rate of 6.29%, they're looking at paying over $490,000 in interest over the life of the loan. It's no wonder mortgage applications are down. After rising nearly 4% the week before, mortgage applications fell nearly 4% last week. Last week was the first increase in 6 weeks. And while purchase applications fell 1% from a week earlier and were 29% lower than the same week last year, most of the decline was due to a drop in refinancing as interest rates rose. The refinance index fell 11% from the previous week and was down 84% from the same week last year. If you were lucky enough to lock in a rate in August, you might have moved based on your political beliefs. Our own Mike Savino will have more on that trend right after a word from our sponsors.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.anymortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.anymortgageexpo.com.
It looks like Roe v. Wade has brought this issue to the forefront of homebuyers' minds.
Now that abortion access is a matter for state law, more homebuyers are taking this into consideration. Or at least that's what they say. A new Redfin survey found more than half of buyers and sellers want to live somewhere where abortion is legal. That's up from 40% when Roe v. Wade was in place.
Before, because abortion was guaranteed at the federal level, it wasn't as top of mind for people who are moving across state lines. But now it is a much bigger deal, the laws that are on the state at the state level.
Only 11% of respondents say they want to live in a state that bans abortion. That's actually down. The same survey found buyers are also focused on other social issues too.
Well, it seems like most home buyers want to live somewhere with strong gun protections, with gun control laws.
It used to be that people focused on where they can find work. While that's still a factor, societal changes are letting home buyers move around, and that's letting them consider other priorities.
We are seeing a record share of home buyers move to a new metro. So whenever there's a move, there are considerations like what jobs are there. But with remote work, that's not the top concern.
But are they following through and actually moving based on their social views?
The highest motivating factor for where people live is just affordability, especially in this economy.
That means we're not yet seeing a migration away from red states to blue states.
I think it's going to matter for some people on the margin, people who maybe were considering leaving the state anyway, and this is like the final straw, but I don't think it's going to be a large effect.
You can hear more about the survey on The Principal, the Mortgage News Network's daily podcast. It's available everywhere you get your podcasts. For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. And finally, more layoffs in the mortgage industry. This time, it's non-QM lender Angel Oak. The company is cutting 20% of its staff, pointing to current economic conditions that are challenging the mortgage market. The company confirmed that it reduced its headcount by 75 employees, but its layoffs are sure to send shockwaves through an already struggling part of the industry. Just 2 months ago, non-QM lenders seemed to be dropping like flies, stirring fear amongst loan originators and brokers. Executives tried to put a positive spin on what was happening at Originator Connect in August, but since then, the Fed raised rates again. We'll be right back after a word from our sponsors.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.